Hello, and welcome to today's webinar hosted by 28 Stone and Cirrus Research, Supercharging the Advisor Workbench, an AI use case for client engagement. I welcome Thomas Dolan, co-president of 28 Stone. He will be kicking off the presentation. Over to you, Thomas.
Thanks, Michelle. And thanks everybody for joining us today and welcome. Just real quick, for those of you unfamiliar with 28 Stone, we're a custom software provider who, for the past 14 years, have been delivering software focused exclusively on the financial services community. So again, welcome to today's webinar. It's really a great privilege and an opportunity for me, honestly, to be moderating this panel. Like many of you, I'm sure, I find it really fascinating to see and hear how AI tooling, as it continues to very quickly mature, is being used to complement financial services workflows in general, and specifically in this case, to hear a little bit more about how the Cirrus Narratives Workbench is leveraging AI to enhance research for the financial advisor. With me today are Satya Pradhuman, the Director of Research at Cirrus Research, and Vinu Bolasetti, AI and buy-side segments leader at 28 Stone Consulting. So thanks everybody for joining, and maybe we should just jump right into the questions. So Satya, maybe this is for you. Maybe we can start with just coming up with some of the business drivers behind the Cirrus Narratives Workbench. Maybe you can just spend a few minutes again, the origins and backstories of what makes this platform so necessary.
Sure. First of all, Cirrus is an investment research shop. We service and work with the institutional investors that are out there. We've been at this for about 18 years, and before that, another 20 years in the larger banks working on research. And a lot of this really stems from the experience we've had with the macro, the sector, the industry work, even modeling work. So this is really our strong suit over the years. In the last 6-8 years, we've started working with advisors. And what struck us was that as we got to know their workflow and their world, we realized that there was a real need for better tools. And an example of this, though, is if you were to go on some of these dashboards, to some degree, you're going to see lots of like greens and reds, lots of performance lines. In fact, just too much data and not enough insight. If anything, an analyst is trained at taking a ton of information and sort of like squeezing it into pulling out some insight from it. And so what the opportunity is really to combine skill sets of analysts that are used to sort of looking for actionable ideas, taking very rich curated data, and then taking advantage of the new tools, the large language models that have surfaced. So in short, we've designed here a coach for advisors in a scalable way. And I'll show you how this kind of comes together. But before I do that, I just want to call out a comic strip I saw a few weeks ago. And in the comic strip, it basically it had a group celebrating on a yacht. And my reference to LLMs is I didn't really use the word AI, and I'm a little nervous about using it now because the folks on this yacht that's celebrating, they're basically a team celebrating. And one of the employees goes up to their manager and says, "Hey, how can we afford this? This is great, but how can we afford it?" And the manager was very quick to respond. She basically said, "Hey, we changed our department name. It went from personnel to personnel.ai." And I joke, but I'm trying to get at something which is these are powerful tools, but I don't think they can do everything. And so with that, I'll share with you a little bit of how I think this stuff comes together, where you can now take advantage of very industry-specific data set skills and make it very useful for different groups. So with that, this chart I think is kind of cool because this upper panel shows like, yes, there's large sets of data out there. But importantly, we're going to have clean data sets. And then from there, the skill sets of a financial analyst, a strategist, these are the things that we've been building for decades in our published form. So now you take some of that stuff of where we're trying to find good ideas or flag concerns, take that skill set with the data, and now you apply it and sit on there a large language model. All of a sudden, you're able to generate actionable insights for a broad set of advisors. So I think that's the sort of gist of it, of how we came into this game.
That's great. Binu, anything to add there?
Yeah, no, as Tom, you mentioned, I also help running the buy side segment as well at 28 Stone. And so for a couple of years, we've been very excited about the transformation that's happening in this, let's say, mass affluent and wealth management and financial advisor space. And the tooling in general has lacked industry compared to the rest of the financial services. And so we've been excited about potentially, disrupting the space with like innovative ideas. And so when Cirrus came to us with this idea to go to market together, it was an exciting idea, not just from the tooling aspect, but also from like a market disruption aspect that Satya shared. One of the things that drew us to this is we have been prototyping and building several AI-based prototypes, again, with use cases in the capital markets. We have a Lithos QAI framework that we've, right now have like about 3 different use cases showcased on that. And a lot of that was built on, let's suppose, data that has a very specific narrative. And so when we apply that data to these LLMs or even to generative AI tools, it's quite clear that the trends and the insights that a human might be able to elicit is also capable for these models to elicit, right? And so for us, the interesting thing was, now can we take like a larger, broader, historically clean data set from Cirrus and generate the same type of insights? And as you'll see throughout the webinar, we'll show you some videos and some demonstrations that will actually proves out the case. And that was one of the reasons that I think 28 Stone was really interested in coming together on this idea.
Yeah, absolutely. And from my perspective, at 28 Stone, we say a lot when we're talking to clients about looking at AI and really any transformative technologies as more complementary rather than disruptive technologies. I think people can fall in love with the disruptive nature of these types of technologies, and then start carving out a plan for years before they actually recognize any value. What I love about this platform is that it is very human centric, and it's using the AI/LLM stuff to complement, to enhance, rather than to completely change whole cloth. In this case, an advisor's workflow. So that's really appealing to us at 28 Stone. We think we can add real immediate value and get stuff to market rather quick like that. So thanks for that, guys. And I guess at this point, maybe Satya, we can do a little bit more of a deep dive into exactly what the Cirrus platform is. Does that sound all right?
Yeah, that sounds great. So, over the last 6-8 years, our firm has begun to support investment advisors as well, as I've said. And as we've been building out this framework, we've had a chance to learn a little bit more about really their goals and their challenges. And at the end of the day, it really, their mission is to better serve their client, to basically help them grow their business. These are the things that it's really the know your customer part of it. On top of that, we also learned it's like, help them communicate better with their clients. And importantly, whatever we come up with, it's got to fit into the workflow. So what I'm going to do now is show you a little bit of there's 3 parts of this. This first part is the open canvas. It's effectively the playground for the data. And you start to see how this stuff comes together. But before I do that, I just want to thank some of the folks. We've been at some of this in the background outside of the day job for the last 5 years, building and designing. I got to thank Union College, Professor Strignitz. She's a professor in computing. She's worked with us for 4+ years to really bring this forward. Akshay Kashyap, an engineer from Union, now in the industry, one of the original guys that helped us really kind of like formulate this. So, and a lot of other people, including the research team. So let me share with you now just the open canvas. So this is a very high level version, but this will get you there.
Effectively, the first section of this platform allows the advisor to study markets, to investigate industries, sectors, funds, stocks, etc. And what we're after, a lot of the panels, what we're after is not just performance. In this case, we're very, very focused on the fundamentals that are driving asset prices. Our belief is that earnings drive share prices. So the question is, where are the fundamentals? And so let's begin in the most open, broadest fashion. If we look at the sectors and industries, and let's say I want to investigate consumer discretionary sector. So the sectors are from our curated library here, where we've basically Cirrus has cleaned out the company universe into critical sectors, industries. Now, what you're looking at in the first panel is the performance. And as much as it's showing that the group is underperforming, what we can then do is begin to understand where the top line growth is going effectively. If sales growth are getting better, but potentially that's good fundamentals. If sales growth is weakening, pretty unlikely to be a favorable backdrop for the stock. So in this instance, what we're seeing is that there has been a general slowing in top line growth. In addition to that, the valuations, this group is now selling at a discount versus its long-term averages as seen here. In addition to that, there are other variables such as earnings expectations. This begins to explain that to some degree, the estimates, the outlook for growth had been slowing and in recent months has begun to climb. Additionally, margins, are margins good and bad? This is a group that is generally a lower margin group versus the overall market when you think about the consumer space going up against, let's say, the technology sector or healthcare. Okay, so from there, we can now drill down into a particular industry. So if, let's say we're going to look at auto parts, you then can repeat the entire dialogue in this fashion. So let's say we were now to look deeper into a single security. We could either go into the particular security, we can search up here in the search box, or we could just follow through the logic. And let's say we wanted to look at Lear. So in Lear's case, the performance has actually been lagging fairly sort of status quo in the last few quarters. Up here, it explains what the raw performance numbers are relative to its industry group. From there, again, you get into top line growth, valuations and margins and so on. So this is allowing you to investigate a broad sampling. Taking it a little further, we can also get to the funds data. This allows us to now investigate ETFs. So in this case, when we look, the landing page actually gives you a few highlight items such as best performers and laggards. In this case, the question is, why is the Invesco DWA Healthcare Fund a laggard? Well, in recent period, it has lost ground, but over the last few years, it's actually worked fairly well. In fact, if I look at top line growth, it had been very strong, but it has begun to decline sharply. And it's possible that this recent reporting period has caused the market to wonder where the growth rates are going. In addition to that, the valuations are also at the very high level, well above, let's say, the longer term average to the trades at. I believe this data, again, it's curated from our data sets. The longer term average is effectively, I believe, a 10-year sampling average. From there, again, we can look into expectations. We see that the forward year estimates are starting to fall out a bit. So you could understand why there could have been, let's say, short-term price pressures. Overall, though, this allows the advisor to truly investigate various assets as they're having conversations with their clients or they're discussing new ideas for prospects. I'll stop here.
Thanks for that. That was great. Looking at this, it's what comes to mind. Obviously, there's nothing more critical to any LLM than high quality data and lots of it. Can you talk, Satya, maybe a little bit about your data at Cirrus and why ensuring its high quality is so important to the narratives platform?
Yeah, sure. I mean, I think, this idea of releasing these tools upon the internet for open data, I think is dangerous. There's a slide here we've got that basically gets there here. So this is a layout of some of the data sets that Cirrus traffics in. So the idea is that, yes, we're all looking at different securities, whether it's a stock, a fund, or a bond. In this instance, though, what we've got is over the last 18 or so years, we've been cleaning and assigning stocks to critical Cirrus sectors, industries, Size benchmarks have been defined, sector factors such as high beta, all of these characteristics, size, quality, growth versus value, and we take a lot of that to design active portfolios. From there, you also have a fairly deep dive into ETFs and even the tactical stuff that we've been building for years, the sort of crowding measures, the risk appetite measures. These are the things that we traffic in, we look at to help us write a report. So what's kind of neat about this is really the new sets of tools allow us to then share this type of material with a lot of folks instead of us using it just to write one report at a time. So I think that's very powerful. And I think, the important thing here is, the popular phrase is domain expertise. That's what's starting to surface now in this industry. What that really means is that you've got seasoned people that are used to looking at a ton of information and figuring out what are the few things that really help me do something with it. And so, and then it also gets back to really what we learned in school, garbage in, garbage out. So as much as these tools are wonderful, good luck, I think, trying to apply some of these powerful tools upon uncurated data sets.
Mhm. No
Yeah,
doubt.
and
Yeah. Good, Vinu.
yeah, and just talking about the quality of data that needs to go into user LLM, right? I mean, I think broadly speaking, if you think of these as sort of like pattern detection and pattern recognizing machines or algorithms, sometimes you can see behaviors that might, feel odd to us, right? So for example, one of the things that we noticed is when you have a stock that the model, for instance, correlates the idea of outperformance with gains, right? Which I think generally makes sense. But there are some times when a stock in relation to its counterparts in a sector or a fund might outperform, but actually have outperformed because the sector lost 20% and the stock just lost 16%, right? In that case, the stock didn't gain. It just outperformed the sector by 4%. So again, just sort of like ensuring that the biases that the model has towards the data that's used in it, and then guarding against that so that when you then send out communication that's based on like the model output, you want to be careful, right? And so that's part of like the reason when we think about like it's not just about the data that's going in, it's also the underlying correlations that the model has based on like the information that it's been trained on.
Great. That's really interesting. As you're talking, one of the things that jumps to mind is maybe looking at this. We can take maybe a little bit of a look at this from the perspective of the actual advisor, and maybe we can talk a little bit about some of the key pain points that current advisors within the current advisor workflow that the Narratives platform is especially good at soothing.
Yeah, I mean, I think, what Venu just flagged, though, this idea of relevance and context, it's huge. You can't just throw, tons of data at a machine and expect something useful. Well, we've spoken with advisors, especially the last few years, we started to more formally interview them about what their workflow was. And from listening to them, there's a lot of stuff we learned, but the big takeaway was time. How do we save them time? They have so much they've got to do. But the idea, though, is that studying clients, their holdings takes time. It takes some advisors hours to review their material on the client for a meeting. And so can we save some time? Can we be more precise? Can we be more deeper? And so those are the things. At the end of the day, they play a shepherding role. And so to give them a front end panel with just a lot of flashing greens and reds, I don't know if that's very helpful. And markets are humbling. I think at the end of the day, it really is this idea of, can we get them information to have conversations with in advance before things really surprise. The adage of nobody likes a surprise it really stands out here in the investment marketplace. With that, I think what I can do is let me share with you a short clip now of what we call the dashboarding experience. So ultimately, this was to me the idea that if an advisor has to spend time to think about a client, to then go have a conversation, lunch or what have you, what's their prep time like? So this is one of the applications from the base model.
In this case, what we're doing is we're looking at effectively a dashboarding exercise. And what this does is it allows an advisor to study a client's exposures and really flag any concerns that might surface. Importantly, this could also be used for prospecting. So let's say you get a sampling of an interest list from a prospect, you're able to run it through this filter and be able to come up with some key summary observations. So with that, I'll now get into the client portfolio section. So when we're in the client portfolio section, what we'll then do is pull up a particular fund. So in this case, I've made a sample portfolio with a client name of Jane Safety. So above here, standard sort of simple performance data, the number of holdings, the volatility levels of the overall holdings. Now, when we look at the holdings, this heat map allows you to get a very quick bird's eye view of what's going on. Again, very, very intuitive. Green is good, red is bad. And so the upper half represents a sampling of ETFs that this client holds, and down below is a sampling of single securities that they happen to own. So what we can now do is take a look at, let's say, for instance, the healthcare sector. So what this does in this particular fund, it's the XLV. It does a breakout of the particular characteristics. So in this case, it starts out with performance. Up here, I can expand the menu to really bring it full screen. And then from there, I can begin to look at critical elements. So performance has been in line with markets. That said, we've seen a real fall off in sales growth for the fund. Importantly, valuations for the fund have been declining due to the performance, and it is selling below market levels. Earnings expectations for the fund, again, what we are seeing here is the forward estimates are starting to come back to life. Importantly, this is the stuff that let's say an analyst that's used to data can look at and interpret, but the observations I've just recorded, the text is actually here for you. So you can get a very quick read on the data, but importantly, it helps interpret what you're seeing. When we look now at margins, we do see that the margins have climbed sharply, the group has worked, and now it is beginning to slow. So this allows us to examine a particular fund. From there, we can look at pretty much any specific area. So let's say we're going to look at, let's say Salesforce. In this case, I've got 3 areas that are in red. So if I look at, let's say, the growth rates, and in this case, and I'll expand the window again so we see a little better, but in this case, we've noticed it's been quite a laggard. The sales growth has been slowing, and the valuations are now at a discount. So to some degree, this allows you to quickly understand why Salesforce may have 3 reds in its paneling. Importantly, though, as much as the data is here, what we're trying to get you to is really quick nuggets to take away on the observations. So in this case is, how is the portfolio performing? What are the strongest performing stocks, the weakest performing stocks? Is there a shortfall based on what my expected returns are? And so from there, we can then go a little bit deeper, because what you'll notice is on a lot of dashboards, performance data, the reds and greens of the world are very abundant, but try to understand what's going on fundamentally. That gets leaner and leaner. So in this case, the fundamentals, where are the assets with negative fundamental signals, whether it be stocks or funds? What are the assets with the most positive outlook? In addition to that, are there assets exhibiting unusually high volatilities? And so, or where they've deviated from expectations. This is the good stuff that I think an advisor needs to quickly be able to get to prepare for their conversation with their client. And so as much as there's a lot of data and a lot of number crunching, it all comes down to nuggets of information that can be useful for you to guide your client. Okay, I'll stop here.
Alrighty. So yeah, at the end of the day, I mean, what we learned in going through this process was we did some testing as well. And what's interesting is with computers and software, it's so easy to give more. And what we actually had to do in the test cases was really simplify, thin out, cut to the chase. Because it's not like you're going to sit down at the beach and read a novel, right? This is a job. You need to get the information quickly. So a lot of what time was spent here in the initial designs was to keep it very lean.
Just in terms of like advisors saving time, so 28 Stone, we've had experience building software for financial advisors. And one of the projects that we worked on, we re-engineered like a legacy platform to somewhat more modern platform. And part of that, we also sort of like evaluated the workflows and tried to improve the workflows, right? So that things that could now be available to consumers directly, they were able to see that, right? So for instance, if you think of things like, I want to just ensure that my retirement planning is on target, right? And you might do that on a monthly basis or a quarterly basis. Prior to the work that we did, the advisors were getting monthly calls or quarterly calls from clients just to check in on how they were progressing towards their life goals. And then once these became more of a self-service or push, they were still getting those calls from these clients, but the conversation shifted to a much higher level, right? So it wasn't just factual, it was actually more around like, I'm noticing certain trends that are much more important than simply just understanding, I'm at this point and I was at like a different point last month and I was expecting to be somewhere else. And so I think, and one of the things that we heard was by ensuring and providing that information, these advisors were able to like meet 40% excess demand compared to like, the work that we had done previously, right? So just looking at, Satya, how you're describing all of this stuff, at some point, right, when this information is available to the end consumer, they then get to get the insights and think differently about how they should be saving for their retirements and aligned with how institutional investors think about retirement and so on. So that's another interesting, exciting thing to look forward to.
Yeah, that's a great point, Venu. I mean, I think at the end of the day, there's a line in the industry of if you're talking performance, you're losing. And what this is about is to get underneath performance, get the advisor a sense of fundamentals, and maybe they don't even have to use it. But the fact that they understand this, they can speak to the client definitely more concretely. And clearly some clients want a lot more details. So, we can always give more.
Mm-hmm. It's interesting. Yeah, it seems like a theme about the insight over just data is a key aspect of the platform. And so we talked a lot about the time aspect, and that's obviously critical for the financial advisor. But beyond that, maybe we could talk a little bit more about how the platform, drives the advisory team's business growth, and just as importantly, how it helps advisors potentially retain their existing clients.
Yeah, I mean, I think at the end of the day, the idea of like prospecting, right? That's you're going to have a conversation. The potential client will have some interest ideas. The question is, how quickly can you look at that and say something meaningful? And so it is a very competitive field, and as a result, I think the advisor that comes up with more concrete details for the prospect, I think that's key. Two, steady, constructive support. In other words, there's an information flow, some sort of guidance that comes along. And so, really, the other thing here is that with AI tools surfacing, the bar is being raised. So clearly, advisors really need to be able to raise their game and at least be more aware. The last section I wanted to get into in terms of the platform is also in terms of communication. So this idea of, how do we stay in touch with the client? One of in many of the conversations I had was like, hey, help me write the letter, quote unquote. And so what we did was also to build out a communications portal here. Let me share that with you now. And so let's see, we've got that. Yeah.
And in many of our conversations with advisors over the last couple of years, we've learned one thing: help us write the letter. That's been the key phrase. So what we've done, we've already covered the overall dashboarding. We've covered the summary notes, but now we're going to bring it to a more formal level, which is generate letter. So for instance, if I've got a client portfolio, I'm going to stick with the same safety portfolio to generate a letter. So in this instance, there are a number of topics here we've selected. Now, to some degree, not every client's going to look for the same thing. So the advisor has a chance to select what sort of elements that matter to the client. So maybe some clients want to really learn about performance. My guess is just about everyone wants to. But in addition to that, where are the volatility levels relative to what you've set? What are your exposures like? Is it good, bad, ugly? In terms of fundamentals, where's their growth? Where do we have assets that are not acting properly? And so on. So you can imagine the variables that we could build into this sort of framework for communication. But let me just give you a sampling. And in this case, we're going to run a large language model and then have it generate summary performance language. So in this case, it starts telling you about how the portfolio has performed the last few months, in the last year against the market. From there, we can then jump into the sort of volatility of the portfolio and where it's at relative to market levels, the exposures in terms of what are you holding, what are the names with the most significant exposures, fundamentals, and so on. So you get the idea of how the selected variables could generate language that'll help you really construct a communication piece. I could also imagine this getting to a point where if it's for a prospect, it could also get to a PowerPoint generation. So from here, let's say I've read this and I think, honestly, this client's not going to care about volatility. I could cancel that. And then I'll take a look at the printer-friendly view. And then from there, export it to Word. So in short, this allows us to be able to then grab the text, start changing the note and customizing it for Jane. Again, this is the summary block text, but clearly an introduction and whatever else you need to add or delete, you can do it right here in the box. So with that, this really, it does offer a wonderful new tool set that allows you to get summary information to your clients quickly.
So yeah, I mean, there are a few other features in there that we've gotten to that I didn't really set up. But at the end of the day, if you can quickly get some communication, use it. I think that's the best way to be able to create a dialogue over time.
Mm-hmm. Absolutely. And we can, as I'm looking through all of this, all these amazing screens and all these features, it reminds me that we can't ever really have a discussion about an AI powered services platform without talking about the critical topic of data privacy. So maybe we can talk a little bit about how the Narratives platform addresses privacy concerns.
Yeah, I can take that.
You want to take a crack at that,
yeah.
Ben? I'll
Yeah, sure.
maybe it afterwards.
Sure. So just to kind of like go back to a couple of the things that Satya has been elaborating on, right? So the advisors are pressed for time. That's a known fact. And there's also like the need for growth and prospecting that like eager advisors need to do, right? And when you throw into that mix that these generative AI tools are efficiency enhancers and productivity enhancers, what you're going to get is eager advisors going off and using publicly available tools like, let's say, ChatGPT, Anthropic, Llama, any of those other tools, right? And one thing to keep in mind is with these publicly available AI solutions, the frontier models are really strong, but these companies are also product companies, right? Therefore, they're building features on top of these frontier models where some of your data might get commingled with others, and there's a possibility that like information you're sharing could somehow make its way to somebody else in the conversation that's completely unrelated, right? Now, again, that's not by design. It's primarily because these are product companies that want to build efficiency and convenience to you, And the data privacy might be an orthogonal thing to just giving you the convenience, right? So when we chose to build this solution, one of the key criteria we wanted to do was like not use any of those publicly available services, but really use a base model, that's controlled much more tightly. And so in our situation, right, we are using Mistral, but again, like the model itself is somewhat fungible. And if there's another model that's more appealing to individual firms, we're able to accommodate that. But for us, the data privacy standards and the risks of these publicly available services in a compliance and highly regulated environment and competitive environment does not yet meet the, I think, standards that we want.
Yeah, in my conversations with various advisors, I think there's a management challenge here surfacing for investment firms. And a lot of that is really, you've got a very competitive field of investment advisory, right? These are folks that are going to go out there and use what's available. So advisory firms are going to be forced to come up with an industrial strength solution. Because what happens if you're taking information and you're going on the web and you're going to use ChatGPT free, right? You're punching that in, and then the question is, A, is it correct? And then B, where is it going, right? Who else is seeing this? And so at the end of the day, I think there's a real management issue that's going to surface with these tools just coming out of the woodworks. And there's a line in our business, which is, if you're not paying for it, you're the product. And so this is really a burgeoning challenge that's surfacing. Second point, though, when it comes to the advisory business is compliance. Compliance is a very important role for investment advisors. And so to some degree, this kind of communication that's a steady pace, that's with clean data, this is the stuff that creates paper trails for audits. So really good stuff that the industry has to deal with, and is probably, if anything, it'll continue or maybe even get more severe.
Yeah, understood. Just look at my notes here. Vinu, maybe the next one's for you. We've obviously looked at a bunch of exciting features on this application, but maybe we want to talk a little bit about how, in your opinion, and maybe a little bit about the under the hood stuff, how it differentiates from other things. So, in essence, what is the secret sauce behind the Narratives platform?
Yeah, I think the secret sauce is perhaps a couple of different combinations, right? One is obviously the data set from Cirrus and the clean and the robust data set that Cirrus has. And the second is, when we are prompting these for the communication and for sort of the analysis that's being generated in these and within the various parts of the application, you see, we use a combination of facts, right? So these are things around the calculation of the portfolio analytics, and then we use stylistic elements, right, around like the choice of language, the client engagement, and how does an advisor today communicate with their clients. And we want to replicate that sort of like stylistic elements, but we want to ground them again in the facts that facts of the system that's available, right? And then the other thing, obviously, Satya touched on this a little bit. Again, so by the very fact that we're using a base model in very tightly constrained, sort of like controlled environment, and we put in like compliance and audit trail, so you can understand how your users, let's say, are interacting with the LLM and how sort of like all of that's happening. And so it's a very controlled environment. And again, we don't really use anything beyond the base model, right, in terms of like being able to provide that. So,
yeah. Sorry, go ahead, Venu.
Yeah, and again, just in terms of like the facts and so on, right? So like in terms of like generating the facts, we also use some templated languages, again, just to make sure that the things that are going into the prompt can accurately capture that, this analytic grew, or this analytic drew down, or this analytic stayed flat, right? Again, based on the fact that we have some thresholds. Satya can talk a lot more about, his intuition in there, but that's another key aspect here as well.
Yeah, when we first started working on this project, the term AI, we all know what it stands for, is artificial intelligence. But I also think after working with this the last few years, algorithmic intelligence, because what it's allowed us to do in the prompt engineering section of this code is it's allowed us to bake in nuanced rule sets that as professional analysts we've been doing forever. And so standardizing data, it sounds very technical, but if you think about it in other industries such as real estate, you're going to buy a house, it costs this. But then the question is, what neighborhood is it in? How many rooms? What's the square footage, yardage? So in a similar fashion, the prompt engineering allows us to really get this machine to behave. And so to sort of put this in context for why research shops have a real important role here, I'll share this with you. So this slide, there are two axes, and basically you've got on the x-axis investment research driven. So at the very left part of the panel is the most base observation. So it's just factual data. The market was up 3%. And it gets all the way to the right-hand skew for more seasoned analysts to be able to get to an investment insight. In addition to that, when you think about the y-axis with complexity, so there's an industry of where there's data delivery folks, all the way up to an industry or folks in an industry that are generating insights. So if you think about this sort of like two-axis world, on the very lower left-hand corner are the index providers, the folks that are just going to give you, hey, the market was down 3%, right? That's good, but that's like data provider. Now you've got more sophisticated data vendors, if I continue to move in this fashion, which is they're in the business to provide you more, they're building analytics, and they're giving it to you. And similarly, what we've seen with the bulge brackets, they're also coming out with their own content to help their specialists work better. So this has been underway. So now with, as an example, I should say, with the financial narratives tool, what this is able to do is meld some of the skill set of the team, our ability to standardize data, but it's always been with an eye towards investment action. So this is really how we see the landscape, that everybody here in this food chain, they're going to come out with some sort of AI prototype or project. But the question is, what was the philosophical start of it? So I think that's what's kind of neat about where we're at.
Mhm. It's really exciting stuff. In closing, I guess I'd like to give you guys another, just a chance maybe to speak a little bit about beyond what we've touched on already. What other features and elements of the platform do you see rounding out the initial launch of the narratives platform?
Vinu, you want to take a crack? I got a couple.
Yeah, sure. So I think a couple of things that I think we're excited about is, I already talked about this, right? I think we see at least like there are frameworks available where you can make the model choice fungible, and we've chosen to use AWS Bedrock in this case. And even in like our own trials, we've tried 3 different models and kind of settled on Mistral as being the one that seemed to be most effective based on the evaluations that we've done. So that's an interesting thing. The other thing right now is, again, just if you think about financial advisor space in general, or people looking for their wealth management or financial advice, each individual is somewhat different, right? Their risk profile, their journey in terms of like where they are with their planning and their life and their goals are going to be very different. So we want to be able to introduce some of that personalization into, whether it's through the prompts or some other sort of like mechanism by which we can introduce that, so that when you generate the communication and we generate like the reports and so on, those can already be included as part of the letter that gets generated.
Yeah.
So personalization, in short.
Yeah.
Mm-hmm.
In terms of what we've heard from clients, really to fit these types of tools into their workflow, I think the mobile version will be where we'd like to get it to. A great example of this is an advisor had said to us, hey, I was just traveling. I landed in this city. It was a 30-minute cab ride to downtown for my meeting. In the cab ride, they could have taken out their phone and said, tell me about Jane, right?
Mm-hmm.
So I think the mobile feature is kind of where the industry is going to go. Risk reports, that's missing right now. That is something that we're really, factors is really what we do. So we are building something that's hopefully an elegant, quick take on the risks attributed. Are you holding too much NVIDIA? Is that 80% of your savings? So things like that really matter. And that really comes from the land of factors. So we're excited about that. And then ultimately integrating it. This idea of integrating it into platforms with other data. So for instance, if there's a risk profile on the client, that can also drive the output or make it more appropriate per se. And ultimately sort of learning, there's memory to this stuff. And so as you begin to use it, this tool can effectively get closer and closer to a coach.
Sounds great. Well, listen, guys, that's the end of my canned questions. I know there's actually a couple of questions if you guys are open for answering them from the audience. I'll try to summarize the first one here from Pankaj. Talking about the dashboard and the pertinent information on the dashboard. And Pankaj is asking about the time lag from data production to archival to retrieval, and then getting all of that piped in via the LLM. And he's asking, I guess, about using a RAG process. Can you talk a little bit about that?
Well, I can speak a little bit to the data, and you can also maybe get into the technology deeper. But in terms of the data, this has been designed to be a bit more strategic. So while we can always feed more and more live data, the fact that what we were trying to focus on were elements like, top line growth, margins. And so when you think about the limitations of filings, by definition, it's not that frequent. That said, the data is updated both weekly and monthly. We're still deciding what makes more sense. And I think if there's demand for it, we can always get to more granular cuts. But Venu, I'll let you take a crack at it as well.
Yeah, so I was just going to actually echo that, right? I think we're not trying to build a real-time attribution or a performance analysis system. We're simply looking at it on a monthly basis, which again, I think the cadence for this use case and workflow, I think makes sense. In terms of again, at this point, one of the things that I mentioned is that we sort of have a two-phased approach here where we're not just throwing all of the data to the LLM and saying make sense of it, right? We're actually doing some pre-processing on our own to say, and then doing some calculations before we feed the analytics and the characteristics of the analytics to the LLM. So we're not using true RAG process in the way perhaps you're thinking, Pankaj. But again, we can definitely, I know we're running behind time here, so absolutely happy to connect a lot more on the details in terms of where you're thinking. The one thing I did want to, I know Satya and I had talked about this as well. There's definitely a really keen interest in terms of portfolio reporting standardization, right? I think this is a key pain point that exists in the industry today that's compliant with the GIP standards. So that's something that we've been talking about as well to see if there's a way to build that out. Yeah, I'll leave it there, and please reach out to this one.
I appreciate that, and I know there's some other questions in the Q&A form, but because I think we're running a bit over time, we'll make sure we get back to you after the webinar on those questions. So again, in closing, I'll just say this has been extremely informative. I really appreciate getting the deep dive into the platform. It's really excited about seeing this get to market, and thank you very much, Venu and Satya. It's exciting stuff. I appreciate it. Thank you very much.
Yeah. Thanks very much, Tom. Thanks, Venu.
Thanks, Satya. Appreciate it.
All right.
Excellent. And thanks everybody for joining.
All righty. Take care.
Take care, everybody.
Bye.
We'll just keep the session open for a couple more minutes. If any of you would like to request more information, there's an open poll. Again, we'll keep this open for a few more minutes and then end the session. Thank you again for joining.
Thanks, Michelle.